What's going on, guys, and welcome back to another video. So in today's video we're going to look at three best healthcare company sector stocks in my opinion. But again, guys, as always, if you're new around here, please smash that subscribe button, as it really helps the channel out, and the more people that can subscribe to this channel and like the videos will increase the exposure of these videos. So hopefully over time I can start to help more people start to invest, and to give them some tips and ideas of companies in each sector that they may be willing to consider to invest in. So without further ado, let's get right into the first of these three companies, and it's probably no surprise to have Johnson & Johnson on a top healthcare sector list. Now, Johnson & Johnson is an American multinational corporation founded in 1886 that develops medical devices, pharmaceutical and consumer packaged goods. One of the main reasons why I love Johnson & Johnson is because they are extremely diversified across many different sectors. And you can even see here on the website that Johnson & Johnson Consumer Health commits 800 million through to 2030 to make its products more sustainable for a healthier planet. And again, renewable sources are certainly in people's minds as well when they're buying products. Now you can see here that they have everything from consumer health products, from skincare to self-care products, essential health products, to medical devices. So they have the orthopedics, surgery, interventional solutions and vision, to pharmaceutical products. So they have like cardiovascular and metabolic disease, pulmonary, hypertension, infectious disease and vaccines, neuroscientists, oncology, etc. So that's just a few of the products that they're involved in. And again, if you look around your own house at home, I guarantee you that you have at least 5 to 10 different Johnson & Johnson products throughout your household. So Johnson & Johnson is traded on the New York Stock Exchange and has ticker JNJ. At time of recording, the share price was roughly $144.60. Now you can see that Johnson & Johnson pays a 2.71% dividend, which equates to around $4.04 per year, which is paid at a quarterly rate. So you get roughly $1.01 per quarter per share you own, which is quite impressive for such a stronghold in a sector that is Johnson & Johnson in the healthcare sector. So we can see from Johnson & Johnson's 1-year chart on Yahoo Finance that it dropped drastically in the crash in March, which is certainly understandable. But since then, it has surged in an upward trajectory between, let's say, March and May, and has dropped again between June and July. And since July, it has started to go on an upward trajectory ever since. And especially in times of pandemics, healthcare sector companies can be hit extremely hard, or they can prosper. And I certainly feel like Johnson & Johnson has made it out the other side of this pandemic in a positive form. So the second company that I would recommend in the healthcare sector is Abbvie Incorporated. Abbvie is an American publicly traded biopharmaceutical company founded in 2013, so it's relatively new, and it originated as a spin-off from Abbott Laboratories. Again, Abbvie is certainly one of the top healthcare sector companies in the world, and one of the main reasons for this is the product offering, and it can be quite diverse. And without me butchering a lot of these chemical kind of names, I won't even bother attempting some of these, but you can see here that the vast array of different products that they offer on their list. And you can even see up here as well in their corporate responsibility, so their patients' health and well-being, supporting their workforce, communities and environment, etc. Their grants. So definitely when you're investing in a company, you should always look at their ethical system as well, as they tend to go a long way in the long term, as companies that are unethical always seem to kind of get caught up in their own greed or their own bad management over time. So certainly, and especially in the healthcare system as well, you should always look out for kind of ethically, environmentally and kind of animal friendly testing companies, which in my own personal opinion is certainly what I'd look out for. So Abbvie is traded on the New York Stock Exchange and has ticker ABBV, and at time of recording its share price was around $89.07. Now, Abbvie pays quite an impressive dividend payout for such a large healthcare company, and it pays around $4.72 annually, which is paid out on a quarterly basis. This equates to around 5.24% of a dividend yield. Again, I always find it interesting that similar kind of sector-based companies formed similar kind of patterns over time. So that's why it's always very important to diversify your portfolio across different sectors. And you can see here is nearly a carbon copy of Johnson & Johnson's 1-year chart, where it was going up and then it crashed in March, and ever since it has started to go on an upward trajectory quite impressively, and has just dropped off a small bit in the last month or so, down to about just under $90 per share. The third and final healthcare sector company that I would brand safe as such in terms of long-term investing would be Pfizer. Pfizer is an American multinational pharmaceutical corporation headquartered in New York. It is one of the world's largest pharmaceutical companies and ranked number 57 on the 2018 Fortune 500 list for the largest United States corporation by total revenue. Again, you need to be impressed with Pfizer's product offering, and it offered products anywhere from the blockbuster drug Lipitor, used to lower LDL blood cholesterol. Then you have Lyrica for pain, and you have things like Viagra for erectile dysfunction, Celebrex, an antibiotic, etc. So there's quite a lot of different array of product offering from Pfizer again, which certainly is needed for a long-term investor to have a diverse product offering so they can stay on top of each sector, and overall the company should stay afloat. So Pfizer Incorporated is traded on the New York Stock Exchange and has ticker PFE. At time of recording, its share price is roughly just over $36 per share. And if you scroll down here, we can see that they pay out a dividend payout of $1.52 annually, which is paid out on a quarterly basis, and this equates to just over 4.15% paid in dividend payouts annually. And again, guys, it is like a carbon copy to the prior companies that we mentioned, Johnson & Johnson and Abbvie, where it went in an upward trajectory until just before the crash, and it drastically, so it went from roughly about $40 a share, and it dropped down to around, let's say, just under $30 in the middle of March. And since March, it went in an upward trajectory again, just like the other two companies, and it crashed in the middle of July. And since July, it has went in an upward trajectory yet again, and just like the other two companies, had a minor dip, but it is starting to go on an upward trajectory yet again. So as a long-term investor, it's always very promising to see a company make it out of a crash and make it back within a few months to its pre-crash levels. So with that being said, guys, that brings the end to today's video. That was the 3 healthcare sector companies that I would recommend you purchasing, obviously after you do your own due diligence, as I am not a financial advisor. But it is worth noting that I have these 3 companies in my very own portfolio, so I kind of put my money where my mouth is, so to speak. I find that these 3 companies over the long term are certainly the 3 best healthcare companies that you'd have in your own portfolio. And to help diversify your portfolio, I would recommend you purchasing more than one of these companies to help your risk. And if this video helped you in any way, it'd be great if you could smash that like button. And again, if you're new around here, please consider subscribing to this channel, as I'd be very grateful if you could do so. So with that being said, thanks very much, and I'll see you guys in the next video.